In this very video, I'm going to be showing you 3 steps to become profitable with SMC, right, in trading Forex. Now, this video is not going to be up to 10 minutes long, right? I'll advise you give it a try. Watch the very video from this very beginning to the very end and see if this video is actually what you need to become profitable. If these 3 steps is what is going to make you profitable after 2 years, 3 years of trading, right? So I don't waste time here. Let's jump right to my screen. Let me show you the 3 steps, right? Now, the first step now is the strategy itself. Let's write down. I believe you all can see my screen. So the first step to become profitable with SMC now is the strategy itself. Let me write down. You know, SMC is a strategy itself, right? Now you need the strategy itself to become profitable. Now, strategy or SMC. That's the first thing you need to become profitable. Now, this is it. It's important to first understand this SMC as a trading strategy. Now, in my previous video, in the video I've been doing on this very channel, you've noticed the video I've been doing now is always on SMC, market structure. This is the strategy I use, right? And like I told you guys, I have just 3 steps to this, right? I have just 3 steps to SMC. The first step, let's put it as this one, right? The first step now is my break of structure. That's the first step that I consider with trading with this SMC. And then the second step I consider or I look out for is my order block, right? Order block is the second one. Order blocks or breaker blocks. This one, BOS, break of structure / change of character, right? BOS / CHOCH / change of character. Then order block / breaker block. I believe you guys know what it is. If you don't know what order block or breaker block is, and I will advise just watch the video to the very end. Let me see if I'm going to explain it. Let me see if I explain it if you are going to understand it. Now, the third one now is the draws on liquidity, right? Liquidity / inducement, right? Now, why do I consider just these 3 things in trading with this SMC, right? Trading with this market structure plus liquidity. These are the reasons. First, break of structure / change of character. Remember, in general trading, in general, the market direction, the market trend is always what you want to trade along with. If the market trend is bullish, you want to look out for buys. You want to keep looking out for long buys opportunity. You don't want to sell when the market is going up, right? And what does a break of structure tells you? A break of structure shows you the direction of the market. Now, this is what a break of structure is for those of you who don't know. These are my recent trade I took on gold. Break of structure is this. Let me use my pattern, then you guys work on it on your chart, then see for yourself if it's on the chart. Break of structure is this. When the price creates a high, goes down, then breaks above that very high. Breaking above that very high now is what we call a break of structure. And for the price is going to create another high like this, like that. Then from that very high point now, it's going to pull down. Now, for it to go and then break above this high now, another break of structure is going to go higher, meaning the market now is going up. It's going to go higher. To break above this next one, it's going to go higher. It's breaking structure. So that's what break of structure tells you, the direction of the market. And many looking at this now, you're going to agree with me that this market is going up. So let's take a look at this on the chart real quick. Let's take a look at it on the chart. All right, now take a look at it. The price now came up to this point, created this very high right here. Then it came down to this point. Now it went above that very high. It broke past that very high, a break of structure. What happened? It went higher. The price now is now higher. Now what is going to happen? It's going to likely retrace to somewhere, push up again to go higher. It means it's bullish. And what do you want to do? You want to start looking out for buys. Right now, a change of character now is what is now going to confirm to you that okay, this market is no longer bullish, it's now bearish. It has now changed. There is now change. It's no longer going to be breaking structure going up. It's not going to be breaking structure going down. Right? In my previous video, I've actually explained this, right? Probably my next video, I'm going to sit down explaining market structure again. Now, that's the first thing I consider. I want to trade along if the market is bullish. Let me take a quick look. Let me do a quick recap on how I took some of these trades. Not all, but some of them. Let's remove all of these charts right here. Let me show you how I took this very first trade. If you notice, this market now has this high, it broke above it. A break of structure is active right there. This is the first thing I need. Break of structure, BOS. Now, if you notice, there's another high right here, and the price just broke above this very high. Another break of structure has occurred. What is this telling you? It's showing me, or it's telling you that this market is bullish, is going up. Now, where do you want to take your trade from? I've now showed you why I look out for a break of structure or a change of character. A change of character is what's going to now show me this is no longer bullish, is now bearish, right? Now, the second thing I want to look out for is order block. If the market is bullish, I don't just go over and start jumping on trades at random points, right? If it's bullish, I don't just say if it breaks above this very high, I take my buy. I buy from order blocks or breaker blocks. And I believe you guys know what it is. For those who have been on my YouTube channel, I believe you guys know what it is. For those of you who are new here who don't know about all of this, watch my previous video and see if you're going to know them. Right? With the way I explain it, some of you guys are going to start knowing them little, but watch those previous YouTube videos and see if you're going to actually understand them. Then in my next video, I'm going to do a breakdown on this market structure. Right? I'm going to do a video on this market structure. Right? So subscribe if you are new. Now, the next thing is order block. Order block now is where I take my trade from. Right, so the last opposite candle, which is this last red candle before the price started going up to break this structure, is an order block, and this is where I plan on taking trade from. This is where I take my trade from. Right now, for me to take a trade from here, you know what I'm expecting now is for the price to come back here and then go up. Now, for the price to come back here and then go up, that means institutional traders now need to buy from here. And for them to buy, they need liquidity in the market. They need to first hit stop loss. If there's no liquidity in the market, if those institutions try to buy from here, it will not work. Right? So what are they going to now do? They're going to now push the price down, clear out those who buy from here before finally pushing it up, just to get liquidity so those institutional traders can enter. But if there's enough liquidity, the price will start buying from this order block. So for the price to buy from there, I'm going to need an inducement. Inducement is where traders are going to buy from. And once traders buy from there now, they're going to likely hit stop loss, then providing liquidity for institutional traders to buy or to enter the market from this order block. So that's why inducement/liquidity is important. And we have so many examples of this inducement. So this is a low right here I'm going to use as my inducement, because traders will likely buy from this very low as a support for them and also as an order block for traders. As this is the last red candle before the price pushed up. So people are going to consider it as an order block. Others are going to consider it as a support level. So many other confirmations right there, right? And traders will like to buy from there, and their stop loss now will be below it. So once they hit stop loss, they will provide liquidity for this my order block to hold. And the price can now beautifully buy from this my order block once it's back here. Right? My target is always 1:3. The price can now beautifully buy from here since it has liquidity. So those are just the 3 confirmations I need, and see what the price did. The price immediately tapped on my order block. And the next thing hitting TP 1:3 already. Boom, made some money. Simple. So that's one thing. First thing is the strategy. Make sure you understand the strategy, right? Me personally, I keep things simple. If you watch my students now, recently they have been killing the market real bad. Notice this is my general group, right? This is my general group, and if I scroll up, you're gonna see different charts screenshots. So if you want to join my mentorship class, there's a link in the description to join. Currently, it's currently going for $35, and by the end of this month, once February registration is on, it's gonna be $50, right? So we are currently running a discount. So link is in the description. Click on the link if you wish to join. Now, the second thing to become profitable with this market or in trading in general is your risk management. Now, I'm going to try and explain this, but in talking about risk management, we need to spend like 1 hour straight teaching this so you guys can actually understand it. Right? Many of you are gonna still fail even after watching this. If you don't actually understand this, and if you don't actually apply what I'm gonna teach you now. If you actually understand it, you're gonna become profitable after watching this very video. But if you don't understand it, you're gonna still remain where you are. But I pray you improve. So risk management now is this. Is how much you are risking per trade. This is what trading is. Trading is you depositing. Trading is you depositing and gradually growing that very account. Trading is not you depositing and flipping the account and withdrawing the next day. That's not how to trade. Trading is you depositing. Let's say you deposit, let's say $100 into your trading account today. Now what's gonna happen? You don't just risk the whole $100 on a single trade. If it goes against you, you're gonna lose the whole $100. Now if it goes in your favor, you can make up to $200, $300 from that very trade. But if it goes against you, you're gonna end up losing the whole $100. And not everybody can fund $100 and blow it that day and still fund again. So what are you gonna do? That's why risk management is important. So with risk management now, you don't just risk the whole $100. Right? This is the way I teach my students. Right? I teach them, if you fund $100, risk just 10% of that very $100. That's $10 on a single trade. Why is that? Some people are gonna feel, oh, this is too small for me to risk, or some people are gonna feel this is too much for me to risk. Right? It's what I personally drive out myself. It's what I personally do. So I risk 10% of this account, which is about $10 of this very $100 trading account on a single trade. And a day, I can take 2 trades, 3 trades in a single day, meaning I can risk $30 a day. Is what I can take myself, because I'm now profitable. Is what I can take if I fund $100. If I fund $1,000 now, I do the same thing. If I'm going to take 3 trades a day, I'm going to risk about $50 on each of these trades. Then if I'm going to take just one single trade a day, I'm going to risk $100 on a single trade. It's up to you how much you are willing to risk per trade. If you fund $10,000 now, if you can risk up to $1,000, you can take it. You can use it as your risk per single trade. Then if you can take, if that's too much, you can take $500. It's always important to know your risk per trade. Right now, you have a risk per trade. I'm going to show you how to know how much you are risking on a single trade before taking the trade. Now, it's important you have a risk per trade. Now, let me explain this real quick. Let me explain this real quick in a way you guys can actually see and you can actually now start understanding what it takes to be profitable. Trading takes time. Let's say you have been trading for a year, right? Let's practicalize something real quick. Now, let's say you have been trading for 1 year and you are still unprofitable. You have been funding, depositing, and still not making profit. This is the reason. First reason is you don't have a risk per trade. Now, if I fund $100 in a trading account today, let's say I have already, remember the first thing is a strategy. If you don't have a good strategy, you are not ahead of the market. You are behind. Now, if I fund $100 in my trading account today and I'm risking $10 on a single trade, my trade personally is always at least 1:3. If I take a trade 1:3, I'll take profit out. At least 1:3. If I can have 1:6, 1:10, 1:20, I do have it most times. Right? Now, at least 1:3. Meaning, for every single trade I take, if I reach $10, I'm going to make $30 on a single trade I'm taking. If I hit take profit. Then if I hit stop loss on any trade, I'm going to lose $10. Nothing more than that. I'm not going to over risk or risk. I can risk less, I can risk lower, but on average, $10, nothing more than that. And on average, TP, $30, nothing more, nothing less than that. Now, I'm going to practicalize it in a way you guys are going to understand it. Me personally, I do take maximum of 3 trades a day. I don't take more than 3 trades a day. Let's say a day now, I'm taking 2 trades every day. Let's say I'm taking two trades every day for 1 week. That means in a week, I'm going to be taking 2 trades every day times 7 days in a week. That's going to be 14 trades in a week. So I'm going to be taking 14 trades a week. let's put it on average. Me personally, I don't think I take up to 14 trades, right? Maximum, let's say 13, 12. I don't think I take up to 14 trades, but on average, let's say I take 14 trades a week. Now, remember, out of that, let's say out of that 14 trades now, I made my win rate is 50%, and I won 7 out of 14. That's 7 plus 7 now. 7 plus 7 now, that's gonna be 14. So meaning, on average now, I won 7 trade and lost 7 trade. That means my 50% for that week was, my win rate for that week is 50%. Now, on average, if I start risking $10 on a single trade, I'm gonna be losing $70 if I hit 7 SL. After hitting 7 stop loss for that week, I'm gonna lose $70. Now, if I hit 7 take profit, remember my risk per trade now is always $10 to make $30 at least. Now, if I make $30 on a single trade, $30 on a single trade times 7 of those trades I took that week, that's about $210 profit. Remember, I lost $70. So what am I gonna do? Minus the $70 I made. That's gonna be $140. Now, that week now, I've succeeded in doubling my account. I made $140 profit that week. I didn't flip the account. I didn't risk the whole account. I was just risking 10% of the trade. But what actually made me this money now was my risk to reward ratio. Now, if I ended that week with $140 profit plus my initial deposits, that's plus my account, which is about $100, which is what I deposited, that's gonna be equal to about $240. So I now have $240 in my trading account. And I've funded, let's say on Monday, I funded $100 now. By the end of the week, on Friday, Saturday, I'm withdrawing $140 profit. Right? It's pretty okay. It's something okay for your account. Right? Now, it's something you can keep. It's fine. That profit is okay for you for that week. Right? But traders, they won't understand this. They want to flip this $100 to $1,000. I'm going to show you how it's possible right now. I'm going to show you how it's possible right now. And me personally, I've grown a $10 account now to over $10,000. Right? My phone is not here. I guess it's in the room. Right? I would have just showed you live now the account. Right? Me personally, I started from zero. Right? I just funded little amount then. But now the account is big. Why? Because I scale up. I didn't start flipping. If I flip it, if I blow the account, I won't have any money to fund again. Now, let's leave my story behind. Let's practicalize this. Now, if that week now you made $140 profit, let's say you didn't withdraw. Let's say you don't need money that week, you didn't withdraw. Now, you are now having $250, $240 in your trading account. Now, you can now say, I will start risking 15% of this account, or normal 10% again. You can just say, let me keep risking my normal $10 on a single trade. Now, let's say in a week, we were taking 14 trades. Let's say a week now we took 14 trades. Remember, for a week, let's say me, the way I trade, 2 trades every single day. Let's say a week I do 14 trades. Now, you'd have been trading for 1 year. How many weeks is in a year? Right? That's about 52 weeks in a year. That's about 52 times 14. 14 trades every single week times 52. That's about 728 trades. That's the trade you'll be taking for a year. Let's put it on average. I'm not trying to practicalize something. I'll show you how I become profitable, right? I'm not supposed to teach this for free, but I'm doing this to help you guys. Me personally, I don't have time to do content, edit videos, and all of that. But I'm just doing it to help you guys. I'm always busy with my students, busy trading. If you notice, I'm always on the chat. I'm in my parlor. I was just going to the chat. Then I feel, let me do this. So those who are always here, 2 years, 3 years that are not making money can actually learn from this and become profitable. Right? And if this video is going to help you become profitable, share with your friends so they can also become profitable. Now, 728 trades in a year. Now, let's say this much, right? But let's say on average, that's it. Now, 728 now divided by 2, meaning you are winning half of this very trade. You have 50% win rate. 50% win rate, or just 50% win rate. Divided by 2 now, that's going to give you 364 trades. Let's say out of that 728 trades, you won 364 trades. Or let's say you lost. That's going to be equal to, remember, you're risking $10 per trade. That's going to be 364 times $10 per trade. That's going to be $3,640 in a year. All right, pretty cool. That means on that very year now, you're going to be losing $3,640. That's much. From $100 trading account, right? Now, that year now, that same year, you won about 364 trades, since you have a 50% win rate for that year. If you won 364 trade now, what does that mean? And you are making $30 per trade, right? It means $30 now, or 364 now, 364 trades times, you are making $30 per TP times $30. All right, so let's do this real quick. Why is this slow? Why is this now slow? 364 times $30. That's about $10,920. Let's put it down real quick. Like I told you, I'm not supposed to teach this to you guys, but let me help you guys. You've been trading for a year. With $100 now, you would have made a profit of $10,920 profit. If you were not flipping accounts, gambling the market, this is what you would have made in profit. Remember, you lost about $3,640. So minus your loss, $3,640. A year now, you've made a total of about $7,280 from your $100 deposits. Right? I've showed you. I remember showing in one of my videos, showing you guys live. From $100, I took it to $5,000. Right? In 3 months. It didn't take. I can do it in a single day. I can do it in a single trade. I can take one trade and turn $100 into $3,000. I can do it. But do I really need it? I'm a trader. I'm not a gambler. I don't flip accounts. So in a full year now, you are making $7,280 profit. You'd have been trading for a year. If you would have been trading like this, with the way I just explained this is what you make last year. You are profitable with a minimal deposit. Now, this year now, you can now say, let me start risking $100 in a single trade. Or let me start risking $50 in a single trade. And remember, you should target times 3 of that. Times 3 of whatever you are risking. At least 1:3 risk to reward ratio. Do that for a year and see for yourself. Now, recently we started a challenge on my Telegram. Right, I've started the challenge on my Telegram now. I funded $10 in a trading account, and I promise that I'm going to take that $10 to, let's say, $1,000, even $10,000 before the end of this year. Right, I'm going to do it live with you guys on my Telegram. So the Telegram link will be in the description. Join the Telegram. So recently, take a look at the signal I sent out. This was the sell. Can you see the play out? The trade is now playing out right now. Gold sell, right? This gave us 1:3 risk to reward ratio, and I'm going to show you the play out on TradingView. The trade play out real beautifully. Now this was the signal. This was the signal. Can you see the setup right here? Now I don't just come here teach you guys because I'm not a content creator. If you notice my video, you won't see any fancy edits, all of that. Why? Because let me be sincere, I don't always have time. Right? I have one-on-one. If you want to join my one-on-one class, there's a link in the description. Message me and then join. It's about $200 for you'll be with me for 5 months. We do 2 classes every week, just me and you one-on-one. I teach you everything. Now, I do that. I have students I train. I have my TradingView to always watch. I have my trade to always monitor. So me doing content is just to help you guys. Right? And also to meet new people who will be interested in learning from me. Simple. Right? YouTube does not pay me, and I don't even think I'm even gonna expect any money from YouTube. Right? Because I don't even think it's none of my business if YouTube pays. But your mentor, I'm not let me omit that. Your mentor, they are content creator, they are influencers, they are cost sellers. Right? But me, like let me omit that. Take a look at the setup right here. It gives us 1:3 risk to reward ratio, and take a look at the setup on my trading view. It's the same thing right here. Our stop loss is about 22 pips, right? And the trade gave us about 71 pips, right? Simple. That was the trade I sent out yesterday. The Telegram link is in the description if you wish to join. Now let's not waste time. Let's continue with what we are saying. Now the third, I've given you two things now. The first thing now is your strategy, the SMC itself. The second thing now is your risk plan, and I've given you a risk plan tactics. Trading is gonna take time. If you actually continue like that now, in the next 2 years, you will now be having a $10,000 account, a $50,000 trading account. Right? In the next 7 years, how much do you think will be in your trading account? That's up to $70,000, $100,000, $500,000 in your trading accounts. Bro, you made it. Right? You are now profitable. You made it. Trading will take time, but those, they don't understand this. On YouTube, they'll tell you how to flip accounts, how to do all of that. And once you do that, you blow your account. You start feeling bad. But me personally, with the way I trade, my students, they already know me. I keep things simple. I'm calm. Even if you see me losing, hitting stop loss back to back, I hardly feel it. Why? Because I've made some decent profit from the market already. And I'm just risking 10%, 5%, 20% of my accounts. It's nothing to me. So, the last one is discipline. Now, discipline is going to help you do this. Discipline is going to help you. Discipline is one of the biggest things in trading. Under risk management, I'm going to get a board. I'm going to teach something on risk management, because you guys need to actually understand this. How to know how much you're risking on a trade, how to know the lot size you should use, how to know the pips you should use. I will advise you. Subscribe, turn on the notification bell, and tell your friends about this very YouTube channel. Right? Tell as many as you can, so they can become profitable. Right? I'm here to help you guys. Right? All of that traders, they are here to make money from you guys. Trust me. They are not here to help you. So I'm not going to talk about that. That's all of their business. Now, the third thing is discipline. In this game, if you're not disciplined, it's going to be difficult. Discipline is going to help you. Discipline is what have helped me trade nothing more than 3 times a day. If I'm not disciplined, you'll see me taking 4 trades, 5 trades in a day. You see me flipping accounts. You see me funding $100 and risking the whole $100. Why? Because I'm not disciplined. Why? Because I see people driving Lambo and I want to be like them. I want to flip accounts like them. I want to buy Lambo like them. Right? But you knowing that's gonna take time to actually do all of this is just gonna make you profitable. And you being disciplined enough to know all of those things are noise in this game, it's just gonna make you profitable. You understanding that strategy is just half of what trading really is. It's just gonna make you profitable. You disciplined enough to stay with just one strategy, it's just gonna make you profitable. You disciplined enough to stick with just a fixed risk plan, it's just gonna make you profitable. Some traders, if they take a trade today, they risk 10% of their account. The next day you see them risking 30% of their accounts. You're already bad at trading. Today you're risking 10%, tomorrow you're risking 30%. You're already bad at trading. That's not how to trade. So we gradually scale accounts. We have a fixed risk plan. We don't over trade. We don't over leverage. We don't flip accounts. Right? Then we have a plan for trading. We don't move from strategy to strategy. We have a fixed plan for trading. We trade our rules. We trade our plan. If you don't have a plan for trading, you're gonna fail. So with everything I've said now, I believe you now see why you're still unprofitable in this very game. I believe it's now so clear to you why you're still unprofitable. With this mathematics I just did, I'm gonna get a board real quick, race on. Right, then I'm gonna write down. Right? Write down this risk plan, how you should go about it. Right? Now, I'm trying to help you guys. Help yourself by subscribing, liking, and sharing the video with your friends. right? I'm even getting tired of talking. How do your content creator always endure this? Well, they are making money from you. That's why they do this all the time, right? They are making money from you. They need you to make money. They need you to sponsor their lifestyle, right? That's why they're always sitting down, creating video, editing videos, and post it so you can go buy their course. So see you all in the next video. Take care, guys. Bye.